Hey guys, Justin Howell, J. Howell Custom Home Builder. I'm here with Jared Ferrans. He's the president of the Grand Junction Market with Home Loan State Bank. And we're here today just to talk about construction lending and mortgage requirements and some of the items that you may need before you go into a build. Jared and I have worked together for many years. I've worked with Jared on both spec type housing and product and pre-sold and custom type houses. So Jared has done a really great job of streamlining the banking process for both builders and customers. So today we're going to get a little bit more from him and talk to him about those processes. So Jared, to start it off, what would you tell a customer about construction banking, just walking into your office?
First of all, I absolutely love construction lending. It's probably favorite type of lending that I do, just getting to see the whole process and the house being built from start to finish. But it can be an overwhelming process. So what I like to do, when I first meet with a potential client is, really just kind of ease their minds a little bit so that they understand and just accept the fact that it is going to be an overwhelming process, but we're there, they're builders there just to kind of help them through that whole process and just kind of hold their hand. So one of the first questions I'll ask them is if they've ever built a home before. And then based on how they respond to that, we'll kind of dictate, kind of the next line of questions. But, naturally, I think the next question that'll evolve is, have you identified or picked out a lot or somewhere that you'd like to build a home?
Looking more at construction lending specifically, what are some of the items that a customer would need to bring to you to help you prepare them?
I would say a standard kind of packet, if you will, is certainly going to entail some financial documents. And I would say from a construction lending standpoint, those required documents overlay or mirror, what's needed for the mortgage loan, because they do work in tandem together. And then beyond the financial documents, we're typically going to ask for construction plans, construction budget, a construction contract if there's one that's already been completed with a builder, maybe some soils reports that have already been done on the property.
Can you talk a little bit more about how the construction loan works, specifically the draw process and the processes during construction, and then maybe how that transfers over to permanent financing or a mortgage?
Probably the industry standard when it comes to the construction loan and how that's kind of structured is, the borrower, the client's going to get approved for a particular loan amount. Typically, those loans are up to a 12-month term.
Okay.
They typically are typically an interest-only product, so they're going to make monthly interest payments on what they've drawn on the loan. So typically, the loan will start with a zero balance, and then as draws are performed throughout the build, money is advanced from the loan. So the loan balance will grow, and those monthly interest payments will grow. So ultimately, when you get to the end, that's typically the largest monthly interest payment that you would see, and that's at the time when you would convert to the mortgage loan.
Okay. So you mentioned earlier about identifying land, and that being one of the first steps. How does the land purchase affect a homeowner's borrowing power and down payment?
Yeah, that's a great question, because we get that a lot, because that seems to be an area where can be a confusing area for folks, is understanding the down payment and that whole concept. So if folks have identified a property and they'd like to purchase it, purchasing it outright with cash tends to be the easiest process. Any money that someone puts towards the purchase of the land or the lot counts towards the down payments. As
a builder starts to wrap up a project and then work into that permanent financing, like we've discussed a little bit, what are some of the things that will be required towards the end of that process, like ILCs, different certificates?
For us specifically, we typically do an ILC, or an improvement location certificate.
Thank you.
After the time the foundation's poured. And the reason why we do that early in the process is because we as the lender, and this benefits everyone in the picture, if there is an issue and there is an encroachment of some sort, we want to catch it as early as possible.
What about interest rate starting with a construction loan and then possibly closing? Could that interest rate change in that time period?
Yeah, that's another great question. And we certainly are in the most dynamic interest rate environment we've probably ever seen in our country. And so it is number one on people's minds when they're building a home or if they're getting a mortgage. And so just to kind of break that down, typically when the construction loan is done, that's typically a fixed interest rate, but that's a temporary loan. So that rate is fixed for the period of the construction loan. And then ultimately it all lands on the mortgage loan and what that interest rate is going to be. And so folks they have a few options when it comes to getting the interest rate maybe locked in. Because as of right now, that's what everybody's most interested in, is locking in that rate as quickly as they can before rates continue to escalate.
Okay. And then of course, insurance requirements, they vary, right? There's a couple different types of insurance that are involved in general construction. You look at general liability and then builder's risk. And that builder's risk can be taken out by the homeowner or the builder. Can you speak to that just a little bit?
Sure. Yeah, that is another good question that comes up quite a bit and can be a little bit confusing for folks. So, first of all, our loan policy requires folks to use a licensed contractor to build the house. And so that contractor should have contractor's liability insurance coverage. And the lender will typically be named as a certificate holder on that. And the homeowner or the client can also be named as a certificate holder as well on that policy. That way, if the policy were to be canceled for some reason, both the lender and the homeowner would be notified. And obviously that would be a red flag. But that's one aspect of insurance that a lender will typically require for construction financing. The other piece to that you touched on is builder's risk insurance coverage, and that's actually going to cover like the contents and the building materials and the dwelling as it's actually being constructed, and so that's going to protect it from any sort of loss or fire or things like that. So you can kind of equate that to a standard homeowner's insurance policy, which is going to be put into place when the house is completed, that's the responsibility of the homeowner.
Well, Jared, I'm really glad that we had this opportunity to discuss some of these items. Hopefully it's helpful for the prospective home buyers and the folks watching this channel. I hope you get something out of this, and I really appreciate your time. Just as a quick recap, getting with a banker early is something that I would suggest, and really just opening up the communication so that both of you can have that open dialogue and discussion, and getting that out of the way early is really beneficial to a construction project.